So the House Democrats' tax plan would increase marriage penalty for wealthy couples. Now, according to their plan, it is focused more on higher income level people, to keep that in mind. But the thing is, they make that claim, right, that is only going to affect people of a high income level. But in the grand scheme of things, it's never that case, right? It always ends up trickling down and basically causing everyone to be negatively affected in some way. But let's get into the story. So the tax package House Democrats unveiled this week would increase the so-called marriage penalty for wealthy couples. So couples who file a joint tax return experience a marriage penalty if their income tax bill is larger than the one they get filing as single taxpayers. So a penalty is more common when each spouse earns a similar income, according to the Tax Policy Center. So penalties exist in current rules though the 2017 Republican tax law reduced their scope. So the House legislation, which raises about $2.1 trillion in taxes over a decade from corporations and the wealthy to finance an expansion of the U.S. safety net and other measures, increases the existing penalty. So the proposal would raise the top income tax rate to 39.6% from 37%, and a single filer with more than $400,000 of income in 2022 would pay that rate. However, the $450,000 income threshold for married couples filing a joint return isn't much higher. It'd have to be double or $800,000 to avoid a marriage penalty in this context. So currently, a single filer with more than $523,600 of income pays the top rate, compared with $628,300 for married couples. Now, there's clearly a bigger marriage penalty. Leon La Brequeux, an accountant and certified financial planner at Sequoia Financial Group, said of the House legislation. Now, the penalty's impact would extend beyond income tax on wages. So a new 25% top federal tax rate on investment income from appreciated stock and dividends would also kick in at $400,000 for singles and $450,000 married levels in 2022. It's not everyday Americans who'd be affected by the change. Paul Aslander, a CFP and the Director of Financial Planning at Provise Management Group, said of the income range, it's pretty high. But again, here's the thing, right? They always are going to be claiming that it's only going to be at these levels, right? But that's never really going to happen, right? It's never just going to affect those individuals. It's going to affect everyone in some form, right? Whether it be, because the thing is, right, with the rate that this country is spending money, right, the true way to really only be able to actually make the money to basically try to fund whatever they're actually doing, you have to tax everyone higher, not just the rich, because the rich is already getting taxed a high amount. You have to tax everyone. This is where you end up getting in countries that have basically a 50 to 60% tax rate for every single working individual, right? And that's really the only way you could actually end up funding a lot of these programs that they're wanting to fund, but also just the massive amounts of printing that is being affected. Because a lot of people don't understand this, but when you're printing so much money, the people that end up getting the most affected are people who are not making much money. So let's say that, these individuals might be the only ones end up getting it taxed higher, right? Let's just say that, right? Let's say that this actually is the case, right? Well, yes, it's going to suck for them, right? But it's not going to make life necessarily harder for them. It's going to be more of an annoyance, right? That being said, with the amount that's already printed and they're trying to keep printing more, someone who's living paycheck to paycheck right now is going to be in a worse and worse financial situation, because your goods are going to increase, your rent is going to increase, your mortgage probably wouldn't increase, but if you were to get a mortgage, it will increase. would be higher than now. Your rates on basically trying to get a mortgage, trying to get any sort of like credit or loans or whatever is going to be higher later on, right? Your spending power is going to be lessened, right? Meaning you're going to have to spend more money to get the same basically quantity or quality of good. And this could be seen just from like gas, right? Just filling up your car with gas. You could tell it's getting higher and higher. Like you're spending more and more money for the same amount of gas, right? And again, this isn't really going to affect these higher income individuals. It's just going to be an annoyance. But all this spending, all these programs that they're trying to implement is actually going to make it harder to live like everyday life for the lower income individual. Like for example, if you are listening to this or watching this and you are living paycheck to paycheck right now, in the next couple of years, it's going to get harder and harder for you because you are going to have a decrease in your spending power, like what you can actually get for what you earn. Meaning the richer are going to get richer because they're going to be the only ones capable of dealing with the hassle of increased taxes. So it's not everyday Americans. Okay. So depending on the couple, the change could amount to several $1,000s of extra tax per year, he said. That's not chump change, he said. It's not going to break anybody, but it is an annoyance. So several revisions may occur as lawmakers continue to debate the contours of the broad package, which may cost as much as $3.5 trillion. Now, the legislation's success also isn't guaranteed due to Democrats' razor-thin margins in the House and Senate and competing visions for how the richest Americans should be taxed. So House Democrats likely established the income bands for married couples to raise more money for their agenda. Auslander said reducing or getting rid of the marriage penalty would mean less tax revenue. As is, the top tax rate and income bands proposed would raise $170.5 billion over a decade, according to the Joint Committee on Taxation, which is Congress' nonpartisan tax scorekeeper. So if the marriage penalty remains intact through the legislative process, high-income couples may change their financial plans. For example, couples may consider filing separate tax returns or even staying single, LaBerca said. So filing a separate tax returns frequently results in a higher tax liability under current law, according to the Tax Policy Center. However, the House legislation may not make this route a money saver for many people. Couples filing separate returns would hit the top 39.6% bracket after $250,000 of income. And the interesting thing about taxes is that like 39.6% isn't 39.6%. Like all these tax rates are actually much higher than what you really think. Like how much you actually end up getting taxed if you were to factor it in and actually like do the research by the end of the year. And this is regardless of whatever your income level is. The amount that they say that you're paying in taxes, you're actually end up paying way more in taxes. You're paying way more to the government. So it's very interesting, but either way, the thing to really understand about this situation, if you stumble upon this, is that this is really just going to affect, honestly, the lower income individuals more so, right? Because like this is just going to be more so of an annoyance for higher income individuals, right? But because again, it never really ever just stays as like a increase in taxes just for higher income people, right? It never really just stays that way. So you can pretty much predict that the outcome would be more expenses on lower income individuals through various means, not just necessarily through federal income tax, but through increases in prices of goods and services, right? More opportunities available to higher income individuals, but not necessarily to the lower income individuals, because the only people that could afford it eventually are just going to be the higher income individuals. Not to mention, because you got to also understand like the situation that all this is kind of happening under, right? Because you got massive amounts of printing, which is decreasing your purchasing power, right? Then you also got massive amounts of people coming into the country illegally, working lower skilled or lower paying jobs, end up basically beating out or, eliminating those jobs for people who are on that lower scale, who are typically living like paycheck to paycheck or, working like lower skilled jobs. Thus, meaning more people are having to rely on, government services or programs to help them out, right? So again, every time that, a country ends up like increasing taxes while also printing a bunch of money, while also not having a strong border, the individuals that are actually going to be negatively affected are in fact lower income individuals. So just keep that in mind. By the way, if you want to learn how to get out of debt so none of this really affects you that much, go check out 14bucks.com to learn how to get out of debt.